All right, everyone, here we are with ticker symbol OPTT, Ocean Power Technologies Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors, and to all my subscribers, welcome back. Let's jump into this chart. So after a bullish run, it had fallen into a bearish trend. I had stated on the 7th, if it continued to fall, it would hit newer lows, and it certainly did that on the 8th. And I had stated yesterday that this support level, I had emphasized that if that got broken through, this would start to see newer lows at 186. It's a very important number for the upcoming days and weeks, but it has slightly moved up, and that's a good sign that the bulls have reappeared. They broke through the 50-day moving average. It's leveled off at 265 right now. And something that I'm noticing that is super important is the resistance level from yesterday to today has been a rejection point twice yesterday and a rejection point today. So this is a very important resistance level that the bulls are having trouble breaking through, and we're going to zoom in and see what's important for tomorrow, as this actually is an important resistance level for the bulls to break through and for the upcoming week. So if the bulls can't break through this, they won't see newer highs. They need to turn this into a support, and that is 273. Break through it, turn it into a support, move further away from the 50-day moving average in an upward direction. The bulls have already managed to get back into bullish territory, and to maintain that momentum, they need to break through this resistance level, which was a rejection point yesterday, and it's a rejection point in the last couple hours of the day. Now here we have our 50-day moving average, which is 236. As long as we're above it, we're in bullish territory, and the moment that gets crossed, we are in bearish territory. So it's super important as well. On the other spectrum, we have what the bears want. The bears want to cross the 50-day moving average, but bring this one down to newer lows and reach the first support level in bearish territory, which is where this leveled off and before the run continued, and that is 212. The bears want to cross 212 and bring this one down to newer lows and newer support levels. So what I want to emphasize to all investors is pay close attention to how quickly this is moving down closer to the 50-day moving average of 236. And if that gets crossed and you're willing to hold through and hold till 212, my emphasis to you is pay very close attention to how quickly this is moving and how the inflow and outflow of the charts are looking and who is dominating the chart. Because once this crosses 212, the bears have dominated the chart already by breaking through the 50-day moving average. They're breaking through the first bearish support level, and they're going to try to break through lower levels and more support levels as they go. And you're going to want to see how quickly it moves, because even if the bulls were to reappear anywhere down here and bring this one back up, that's a good sign of building momentum again. But the bulls won't have control until they cross the 50-day moving average of 236. So my emphasis to all investors is pay close attention to the 50-day moving average and how the stock is behaving. And if you're waiting till 212 as the support level to make a decision or to watch this stock or whatever it is that you're trying to do, my advice is, I emphasize, pay very close attention to how the stock is reacting at 212. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications. Share this with your friends and community. And don't forget to hit the like button and let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.